Okay, so I know online, right? These days there are like tons and tons of Instagram pages, all sorts of ads, and all sorts of programs out there trying to get your attention and trying to talk about one thing, which is how to invest. As an avid stock picker, and to the guy that gave me 1 star on Apple Podcasts, yeah, someone gave me 1 star review. I'm gonna share with you 3 qualitative points to help you level up your stock picking game. Yeah, and what So, good morning, everyone. I welcome you to another day with the Financial Coconut. In our podcast, we're debunking financial myths, discovering best financial practices, and discussing financial strategies that fits our unique life. You get it. Ultimately, empowering us to create a life we love while managing our finances well. And today, we're going to talk a little bit about stock picking. We're going to share with you 3 quality. Is stock picking an art or is it a science, right? So that is the endless question. And I believe it's a little bit of both. Yeah, very, very cordial answer. But it is true. Some things, you can qualify, some things you can't qualify. And that is the inevitability of investing, right? Because humans are humans. They always make interesting things, interesting moves. So yes, today I'm going to share with you 3 qualitative points that I look at, when picking stocks. And whether you pick stocks yourself, I think these are good things to learn because it gives you much clearer understanding of, what you're actually investing. I don't know what else do you invest in robo advisors, or even if you want to buy some unit trusts. I don't know why, but if you want to buy some unit trust, most of them have underlying stocks and equities within them, right? And if you can spend a little bit of time to go and read up on these guys, just get a better understanding of what they do, why they do what they do, and get a clearer picture. It may help you in your investment journey, picking your own ETFs, or just being more comfortable with what you are investing, because underlying most of them, they are stocks, bonds, gold. You get it, right? And to that one guy that gave me 1 star on Apple Podcast, yeah, it's wow, 1 star, bang eh. But anyway, yes. So I think he had some problems with one of my earlier podcasts, which I talk about, also about stock picking, about investing, and one of my main pointers that I presented was this element of luck. And the reality is, I stand by this point. If you cannot handle that investing has some element of luck, right, you will probably never be a good investor. It's because that you can comprehend that there are things that you cannot control, and that is, in the broad, scheme of, broad umbrella of luck as a concept. That is when you know how to size your bets, you know how to hedge, and you become a better investor. If you believe that everything can be calculated, everything can be controlled, then you live in a simulation, like you don't live in the real world. So yes. And for everyone that has given us good reviews and continue to support us, we welcome you back on another episode. Thank you for continued support. And today we're gonna, dig deeper and embrace all these kind of uncertain elements, which are mostly qualitative. Because a lot of times, quantitative pointers like matrices, things to calculate, it's at the forefront, right? A lot of people look at those things, and I think that is a fair start to look at revenue, to look at cash flow, look at all those things that are in the balance sheet, can calculate. Those things are a good start, right? Because those things are your hard matrices, essentially, right? You don't lie. Of course, some of them do, but that's the role of auditor, okay? Anyway, those are easy things because when it comes to quantitative stuff, there is there are hard lines, right? Like you only take something at 5%, you only blah blah blah. You set all these different matrices then that you're comfortable with that fits your investment strategy and you follow them, right? Most people do that. But when it comes to qualitative, right, which is what we're going to talk about, right, it means they got no numbers, right? It's a lot of feel, your understanding of the sector, understanding of the market, understanding of. Also, I'm not saying that after listening to 20 minutes of a podcast, you can suddenly comprehend all these qualitative factors. In fact, I think every one of them requires a podcast on their own. But I decided that we were going to start somewhere. We're just going to make it easy. And I'm going to give you all these different pointers that you may need to continue to do some of research on your own. All right, just going to read up. Okay, the goal of today's podcast is to give you a place to start. After you know these things, after you recognize these things, you can continue your reading, So the very, very, very first qualitative point that I always look at when I invest is who is managing it, the management. Okay, they say, right, tough times don't last, tough people do. And in some way, it is true. There are many, many very amazing management that can turn around. So management, right? Everybody have their own preference, right? Much like choosing your boyfriend, girlfriend. Everybody have their own things that they like. So I'm not gonna go into too much about the likability factor, like the way they talk, the way they present, all those kind of things. Depending on your own way of life, your own preferences, you have your own views, right? So some people may like the person that is drilling holes under the ground and sending rocket ship, and then trying to build some electronic. Some people like him, some people don't. I just happen to fall under the other camp. But I'm not gonna go into all the, the way he talks, the way he speaks, or the way he or she, does blah blah blah. Those are a lot more personal, but I would think there are some factors when you look at management, right? So management would include people like your CEO, your CFO, your COO, your CTO, right? At least these few guys, right? So finance, operation, and technical, right? All your IT is very important these days. So you definitely have to look at all these evaluate, to build your basic evaluation structure for the management. And one of which is this company led by founders? Right, so it is very important that you recognize whether a company is led by a founder, right? Because I think when something is led by a founder, there's personal, interest beyond just monetary, right? There's a lot of actualization, other goals that are on top of just making money or just another job, right? So founder-led businesses tend to be a lot more aggressive in terms of growth. They are more passionate about what they are trying to do. So that's that. But recognize that sometimes founders are not able to take the business to another level, right? Not everybody can be like Zuckerberg, right? From Silicon Valley, Harvard dropout, blah, 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 all the way to managing a huge ass company with all these kind of PR issues of today, right? So some founders cannot transit, and it's okay. You just recognize it, and most of the time they will move on and pass the baton if they cannot transit. But for those that can transit, there is a lot of power in terms of being led by the founder. The passion, the drive to make it work beyond just monetary success is very powerful. So always interesting to invest in a company that is led by a team of founders. Other things like, have they been in the same sector? Have they managed a company of a similar scale? Or if, let's say, the company is trying to go focus kind of business with digital payments, your rewards. He pushed for the new CEO, Kevin Johnson, which was Tequila from Microsoft, right? So everyone was like, why do you use this guy? But if you think on demand delivery, reward system, and all those things are heavy, heavy tech stuff. So then you bring a tech guy to lead the business that gives them the insight and the power. So yes, relevant experience important, right? Whether is it relevant to where the company is or where the company is trying to head towards. I think at the top management, these few guys need to capitalize. Okay, and of course, I think one of the other pointers that you can look at when assessing a management is, are they consistently meeting their goals? Every year they will release, their annual report, and based on the annual report, they will tell you some of their goals, whether it's a midterm, long term, or even goals for this year. And the next year they'll publish again, and then you can kind of see whether are they meeting those goals. And I tend to like management that are, because then that gives me comfort to know that whatever the management say, they will do it, right? And it's not just say because for the sake of saying lah, or they overhype their goals or overhype their capacity. And I personally want to have the kind of comfort to know that I can trust the management that they always meet their goal. And to end off the discussion on management, I think that's one thing that we all can better understand is that if a company is struggling, right, that means they have consistently struggled for a few years. It's not like a COVID, then something happened. Is their business is getting challenged again and again and again, and we're still using the same management, still using the same ideas, and it's not turning around, it's not happening. Chances of it turning around and getting the business growing again and making it, strong and powerful again, it's close to zero lah. Same bunch of people managing the same way with the same strategy. What do we expect, right? So every time when a company is not doing well, or for they have experienced extended, prolonged kind of regression, so point number 2 that I think it's very important in terms of a qualitative understanding is the understanding of business modes, or some call economic modes, right? So if you understand these modes, you get a clearer understanding what is the value of the business beyond just how much money they are producing. Good day, guys. I get it. Many of us want to learn how to invest. Secretly, we may even believe we can do better than the financial planner. But probably the real issue is the distrust we have with financial professionals. We're not sure about their biases or their intentions. How about trying out a robot? No feelings there. Getting the job done in a relatively objective way. Try out Stashaway today, one of the leading robo advisors in Singapore and Malaysia. Check it out at thefinancialcoconut.com/stashaway to get 50% off your fees for 6 months. Get started on your investment journey in a simple, fuss-free manner. Link is in the description below. Okay, so what is a business mode, or some call an economic mode? Essentially, it is a protection around the business, right? Essentially, what is a moat, right? The river around the castle, right? So when you say something has a business mode or has a strong business mode, that means the business has certain elements that give it that, edge above its competitors. So in simpler terms, when we say something has a business mode, a company has a business mode, today I'm going to share with you some common business modes that you can use to benchmark against the stock or the company that you're trying to pick. Of course, along the way, as markets develop, as businesses develop, there are more and more different kinds. And the first business mode is, of course, pricing power, right? If a company has a very strong brand, or he has certain patent, it's unique, it has its strength, then it can continue to charge very decent prices, right? Which is what we call pricing power. If something becomes like a commodity, like Wi-Fi today, right? It's a commodity. There's no more price. The reality is, wherever cheaper you go, which one, right? So you want to go for things. And that usually hinges on them having a patent or being a very unique provider in the space. They're the only one or the only few, or they have a very strong brand that allows them to price something like Apple or something like Nike. They can take things that supposedly, other people can also produce, but because they have a certain brand, they can price. The next will be what we call brand loyalty. And there can be many reasons why someone is loyal to a brand. It can be because of high switching cost and something like Apple, right? If you use everything Apple and then now you want to switch to Android, so ma huan, right? Or it could be just because they find a lot of comfort and the brand quality. Like say every time you think of bubble tea, you think of Gong Cha, right? You go to Gong Cha, okay, maybe you're Koi fan, whatever, okay, but 101 reasons why people are loyal to a certain brand, but we want to observe that the brand, the company, has that kind of brand loyalty of its audience. Which brings us to the next business mode, that is economies of scale. Essentially means that so if they can produce cheaper than their competitors, they can essentially charge lower and be more dominant in the game, right? Or they can have higher margin, make more profit, and it's which is why the big businesses can continue to be bigger on. And that definitely is a very important business mode. And the next business mode is this thing called network effect, right? So essentially, network effect is when more people use it, more people want to use it, right? Something like Facebook. Imagine yeah, I'm sure some people want to use WeChat, right? Because China is a thing now. But then you have no other friends using WeChat. You sign up for WeChat just to talk to their two friends. After a while, you just stop using it. Much like how I started using Telegram. But over time, as more and more of you guys are on Telegram and then we chat more on Telegram, I just, you know, I'm not sure if you remember the beginning of PayLah. When me and my friends, a few of us, because we live abroad before, we live in China before, right? So then when we came back, we were like, hey, there's this PayLah thing, very similar to WeChat Pay, so we wanted to use it. But as we use it, we realized, ayo, cannot use it. Nobody is using PayLah. Who Merchants are not taking it. Your friends are not there. Nobody is using PayLah. So who are you trying to pay? But over time, right? Over time, as more and more people use PayLah, also because this COVID thing, right? People try to be more hygienic and more hawkers are open to PayLah and whatnot. It became a bigger network effect, right? Everybody can use PayLah. You can use PayLah everywhere now. It becomes a predominant way of payment. And nowadays, PayLah is a thing, right? And for another company to come in to challenge this network effect, then they got to have a bigger network than PayLah, right? So that's why, in the view of PayLah, they have some dominance in the game, right? Because they have this business mode of. So of course there are many different business modes. I gave you some of these so that you can go and Google and learn and search more about pricing power, brand loyalty, economies of scale, and network effects so that you can learn, and that forms your basis of discussion. Of course, business modes are always evolving, always have new stuff. So if you have other things that you find is a business mode, definitely share them with us on our community Telegram group. One of these like new edgy, business mode is what people. And a simple way to talk about big data essentially is you having information about your customer. So if you have more information about your customer, then you can better provide them the service and the product that they are looking for, right? Of course, there are many other uses of big data, and it's becoming a thing, and more people are looking at it from a business. Whatever it is, fundamentally you want to make sure that the business that you are buying have some of these business modes, and if they don't, then you got to question yourself, why are you getting them, right? Is it because that they are gonna ultimately have these business modes and they are growing really fast, or what is going on, right? You have to evaluate for yourself. And that sums up point number 2. The last point today about the 3 qualitative factors in stock picking would be what I call the scalability factor. Of course, it depends on what is your investment strategy, what are you looking for. So depending on your investment palette, you want to see whether the business that you buy is highly scalable or not. And to put it on a simple layman term, right? Scalability just means how fast the company can grow, how much they can grow, what is their room for growth. So if we say something is very scalable, then there's a lot of room for growth. If we say something is not so scalable, then it has probably reached its limit, right? It cannot grow any further. So something with very low scalability would be like a consultation service, right? Because there's only so many hours you can sell compared to a product. If you sell a program, right? You sell a course, you can keep selling, right? So that is something that is more layman, more basic. You probably can get a better idea, right? So something that is very scalable will be like a course. Something that is not so scalable will be consultation. But of course, there are 101 ways to scale a business. And when you look at it across the board, right, across all the businesses that you can easily businesses that are highly scalable tend to be, low capital and highly replicable, right? It means they're very asset light. They don't need you to pump in more money to grow the business, right? They can continue to sell and sell and sell. And they tend to be things like software in the tech space or, franchises. Yeah, and it makes them a lot easier to grow, right? Just sell more or keep opening another store because there is a system keeps opening. That is a franchise structure, right? So these are models that are more scalable, has room for growth, or at least easy, fast, and certain sectors that are what we call low scalability factor sectors are things that are very capital intensive. It take a lot of money to build another production line, or it takes a lot of money to build like a whole network structure, like like 5G network, and yeah, highly regulated space. They tend to have low scalability factor. There are things like utilities, or telecommunications, or your airlines. These tends to take up a lot of capital, and of course, there are those in between, like consumer goods. Yeah, some additional capital to grow because you need to produce more, but they're not as much and not as regulated compared to things like utilities or airlines. So depending on what you're looking for, what is your investment palette, you gotta visit this idea of scalability, right? So from my view, I'm predominantly a growth investor, so I want to go for companies that are higher, have higher scalability factors so that they can keep growing and their share price can reflect, the business. Whereas others that are like more dividend based, investors, they prefer, the low scalability factor guys, because it also means that it's tougher to enter their space, right? Because capital intensive and highly regulated, things like utilities, right? Your electricity, your water guys, and yeah, people do buy those things, right? And your railways, and yeah, it is what it is, right? There's a certain kind of investment for different people. So fundamentally, you need to know what you're looking for. You're looking for a dividend way of investing. Is it a dividend strategy, or are we looking for like a growth strategy where we're trying to, buy businesses that can keep growing or at least experience, a relatively fast kind of growth track? And for me, I'm on the fast growth kind of track. So I want to look for companies that have high scalability. So of course, once again, you cannot learn everything at one go. And I know today is like very, very packed. There are a lot of things in today's episode because I just want to use this as a benchmark to kickstart the idea of qualitative understanding for different stocks. And it can be pretty intense. And if you have lasted all the way to where you are now, keep learning, keep growing, and I'm gonna sum up today's 3 points for qualitative stock picking. These are some things that I look at, and number one is I want to make sure there is good management, and good management will be things like, are they founder led? Do they have relevant experiences, and do they consistently meet their goals and their targets? Number two, I want businesses with strong business moats so that they can continue to grow and stay powerful, in whatever realm they are in. So things like pricing power, brand loyalty, economies of scale, network effect, big data are just some of these business modes out there today. And of course, number three is I want to look for something that has a high scalability factor, right? Of course, depending on what is your investment strategy, you got to look at this scalability factor in its own view. So I hope you learned something useful today. Hey, I hope you learned something useful today and truly appreciate that you took time off to better your life with the Financial Coconut. Knowledge is that much more powerful and interesting when shared, debated, and discussed. I hope you share what you gain with people you love, and I want to hear from you. Give me some questions and help me along with building a community of financially savvy coconuts. I hope together we can fulfill our curious minds and our desire for clarity. Join our community Telegram group, reach out to us on Facebook, Instagram, sign up for our weekly newsletter. Everything is in the description below. If you enjoy the podcast and feel you want to keep us growing and stay independent, do find us at Kofi at Kofi.com. With that, have a great day ahead, stay tuned next week, and always remember, personal finance can be chill, clear, and sustainable for all. Test. Wow. Today's episode, wow, really pretty heavy lah, very heavy content, and I hope you enjoyed it. I hope you learned, because truth be told, you cannot finish learning everything at one time. But these, I decided to give you all these pointers at once so that you can go out and learn and, go and gather your experiences. So when you come back, then you have any other questions, you can definitely just go to our community Telegram group and ask. We are all pretty avid stock pickers. Like, we do enjoy, so there's a good bunch of us that enjoy picking stocks. Of course, it depends on what you're comfortable with. There's no one way to invest. And yeah, I hope you learned something. So next week, what we gonna do? Next week we are gonna talk a little bit about these financial habits that keep you very poor, right? And uh, it's not like poverty poor, but some people, they just always want to make money, right? Always want to grow and be wealthy, but they're always stuck. They're always trapped in a certain cycle, and they can never see their wealth breakthrough. And I think there are certain habits that are very common out there that we do practice, and these habits are essentially keeping us relatively poor lah. So we're going to talk about some of these habits to help you easily save up and be rich, right? And yeah, we're going to talk about that next week and steer a little bit away from investment related content. Always invest, a bit sian also. So next week, yeah, we're going to talk about these 3 habits to help you become, richer lah, essentially. If you drop these 3 habits, right, you very easily one year can save 10,000, 20,000, no problem, right? So we'll see you next week. Bye bye.